Hi, this is Amir with the Bulletin Board Heroes here at Zach's Traders Cafe for Thursday, the 23rd of March, and we're in the run-up to the economy-destroying interest rate rise at noon, and that's caused the FTSE to fall back towards the 200-day moving average and the uptrend line from October around 74.20. Below that risks 7,300, which is basically the support for the market post-December, apart from Monday's dive towards 7,200, which probably was the reason that we've managed to rally, i.e. it was a bear trap. But 74.20 area on the downside. On the upside, really still looking for potentially March resistance or early March resistance at 76.40 as the target on the upside if we can recover from the interest rate news. Moving on to the DAX, which has been in a better state through March than the FTSE. Here just failing near the 50-day moving average, that's around 15,300. Below that, we've got that uptrend line from back in October, which is currently around 14,850. That's the trading band that we're looking at the moment. We've got the 50 and 200-day lines both rising. Failure of the RSI at the 50 level going with the RSI with the moving average failure, so that could be a sell signal for, aggressive traders. As we'll see on the Dow, the failure at RSI 50 and the 50-day moving average was the sell signal for the decline earlier this month on the US market. And but here it is now. Here we've got the Dow failing above the the 200-day moving average. That was around 32,300. Key reversal to the downside filled that gap as well, which is actually a negative signal, and also failed at RSI 50 again. We failed at that level to start the sell-off in March, and we're failing there again now. So probably looking for this market to test at least the 31,500 area, which is was post-November support. Below that, the risk of around 30,300, which was initial October resistance, and then late October support. So that's the roadmap on the Dow. On to Bitcoin, which has been defying the odds and the cynics over the recent past. Here, a nice move back towards the 28,000 peaks that we had earlier in the week. Bull flag still in place. That's based around 26,800. Looking for a break of 29,000 to give us up to 30,000 and that late June resistance line projection. Interesting that we're just getting on the oversold. We failed at the overbought area on the RSI scale near 70, but at least at the moment it still looks like this is a mid-move consolidation ahead of a move to the upside. And the key thing here is probably 32,000 is going to be tested just on the basis that that was major resistance on the way down, and even if we fail after that, it would be surprising if we didn't test that area over the next few weeks. On to the stocks, and not many stocks looking heroic at the moment, not surprisingly. Here we've got Arc Minerals, which has bounced off that uptrend line there from the beginning of last year. That was around the 3.25 pence area. Above that, we're looking for at least the 50-day moving average. That's just around 3.9 pence, and maybe up to 4.5 pence by the end of next month as a best case scenario. Bounced off oversold as well on the RSI scale, so a little bit of momentum coming in there over and above the hammer candle that we had yesterday, which was a good predictor of the move that we've had so far today. On to Eden Research, which I don't look at very much, but you can see why from the chart probably. Here, just the first sign that the shares have become very oversold. We went down to RSI 13 or so, and a little bear trap below the old September support there, around 3.75 pence. If we can close above 3.75, then we could have a little rally up towards maybe 4 to 4.5 pence over the near term. Ideally, no fresh break below 3.5 pence there. Onto a stock which has been a bit of a falling knife of late. Future Metals, and a lot of people are fans of the stock. Here we've got bullish divergence, i.e. we've got a lower low for this week, but the RSI higher, even though it's still oversold. And that means that there could be another attempt at a rally. We had a rally the other week, another attempt at rallying through towards the 4 or 4.5 pence zone over the next couple of weeks. Looking, obviously, to try and break the near-term decline in the shares. Unfilled gap to the downside left yesterday, so that is the first port of call. We'd like to fill that around 3.6 pence. Maybe that would be confirmation. An end of day close above that would be confirmation for the faint-hearted in terms of looking for a move towards 4 to 4.5 after that. On to Genedrive, which has been one of the better performers of the year to date, and well, we came back quite hard off the peak there around 48 pence. Looks like we're back in business now, bouncing off old resistance, the late January resistance around 32 pence, and above that looking for a retest of 48 pence over the next few weeks, maybe 2 to 3 weeks. As a best case scenario there. We've got the 50 and 200-day lines both rising, and we haven't been below the 50-day line since the beginning of the year, so that's quite a strong chart there. On to MGC Pharmaceuticals, which has been improving over the last few days, like that bear trap gap reversal that we had below 0.45 pence, held the top of the gap there at 0.5, so above 0.5 looking for 0.7 or even 0.8 over the next 4 to 6 weeks. If you're cautious, probably waiting for 0.6 pence to break, but obviously that would give away some of the upside. But ideally, stay above 0.5 and make progress from there, bouncing off the 50-day moving average at the moment. On to one of the most followed stocks around in the small cap space, Premier African, and nice move over the course of this week, so breaking that line of resistance there around 0.68 pence. Above that, we're looking for the top of that rising trend channel from back in August, as high as 0.85 pence by the end of next month. So let's see if Premier can step up to the plate on that. Stock, which was one of the heroes of the beginning of the year, but has fizzled out a bit, is Prospex. But here, just got the first signs that shares are trying to regroup properly, i.e. we've bounced, we've had a bear trap from below the 200-day moving average around 9.6 pence, little bear trap below the old October support there, just around, around the 8.3 pence level. The longer we stay above 8.75, the greater the chance of a move towards at least testing initial March resistance at 12 or 13 pence. Maybe in the first half of next month. Bullish divergence as well, so lower low for the second half of March, but the RSI the same as it was at the beginning of the month, so that's a win. Like to see an end of day close above the 10 pence level and that resistance line from February, and then hopefully head towards the 50-day moving average at just around the 13 to 14 pence area. Moving on to Scirocco, and here you can see that the shares have been trying to improve or accelerate to the upside, unfilled gap to the upside to start the month, and we built on that, stayed above the 200-day moving average around 0.26, and the longer we stay above that, the greater the chance of a move towards 0.45 pence, maybe over the next 1 to 2 months, and hopefully a bit sooner if the momentum starts to build with that bounce off RSI 50, which tends to be a decent, helpful signal. SRT is next, and here you can see a strong bounce off the rising 50-day moving average, key reversal to the upside, and the view now is above 37 pence, but looking for a break of 45, which is the November resistance line, and that should take us on to 60 pence, perhaps as soon as the end of next month. We bounced off oversold conditions as well, so the RSI went down towards the 20 area. Last time we were down that low, the shares rallied from 25 to, well, they doubled, so hopefully we'll get something along those lines on the next run. Stock which has been on the back foot over the last few weeks, or several weeks now, is San Leon. Here we've got the first signs, though, of a turnaround, coming off very oversold conditions there in the low 20s RSI, key reversal to the upside, and if we close above 21 pence, it would be a gap close buy signal, hopefully then to take the shares up towards 28 or 29 pence and the 50-day moving average, which has been the main resistance for the shares over the course of the last few months. On to a stock which are a company I interviewed earlier in the week, and it looks as though people are starting to get the message. Nice positive message there from Tirupati. Bounced off oversold as well. Last time we tend to see the shares rally quite well off oversold conditions. Obviously the best time was back in July when we went up from 25 or so to, or less than 25, 22 to 50 pence. Bounced also back in February a little bit as well, sort of from the 30 to 37 pence area, but hoping for a better rally this time off the recent low, which was 24 3/4. above the 25p zone, and that support line from August, looking for at least the low 30s here, back up to the 50-day moving average and that August resistance line projection. So looking better on Tirupati at the moment. Speaking of the stock I was going to mention, Verditek, here we've got a situation where it's looking decent. We've got that, we've had a gap close there. We had an exhaustion gap to the downside, bear trap reversal as well, hammer candle a few days back as well, a rising 50-day moving average, and a very nice setup over the last few days. We had that long candle there, and we've only retraced about a quarter of that, which is a very strong bull flag, and that suggests that we should at least get up to 1.2 pence, the top of that broadening triangle from December, and maybe up to the 200-day line at 1.3 pence, which would be quite a turnaround from the lows back in the early part of this month near 0.45. Just the last stock of the day, which is a company which I think I interviewed a while back. Very impressive, I have to say, the interviewee. And here the situation is that Zinnwald gapped to the upside from the 200-day moving average, and actually looking as though it will be able to at least retest the resistance of last month, around 11 pence. Above that, looking for around 12 pence at that May resistance line projection, hopefully as soon as the next week or two. That's it from me today. More updates tomorrow.